What's good? Welcome back to yet another video. We are back at it, and this time around in this video we are continuing with trend reversal trading, or trading with the trend, but basically it's trading when the trend reverses. But we did a much more detailed video on Euro USD and Euro JPY. You can go check those ones out. It's a lot more tricky with assets like US30 and Nasdaq, but for this video let's explain it on US30, because I realized that on the lower time frames it's actually possible. On the 30-minute and the 15-minute time frame, it's possible to do this way of trading, which is basically trading with the trend, which is basically how you trade in the market, right? We trade Forex using trading with the trend, but on higher time frames. But it's nearly impossible with US30 if you're using any time frame less than the weekly time frame to do this. But if you step below the 1 hour and go to 30 and the 15-minute time frame, and I believe others use it on the 5-minute time frame, it becomes a lot more possible and a lot more easy, and it becomes swing trading on US30. But anyway, let's get straight to it, and I believe it's a little more complex on US30 than on Nasdaq. But let's first do US30, and then I'm going to check out Nasdaq as well and see which one is a lot easier, which one is a lot more complicated. But I found some structure over here. I'm thinking of checking it out right now, but let's see, where should I take it from? Let's see over here. Should we start it from this side? I'm not quite sure which side we should take it from, but let's take it from this side. Do we have a low? Do we have some form of structure change over here? No, let's take it from this side. I think it's a lot more easier to explain it over here. Let's see how much risk was it over here. Probably less than 100. It's about 80 points, 400. As you guys know, US30 is quite a very volatile asset. But anyway, let me explain a trend for those who might have not watched the Euro USD and Euro JPY video. But I advise you to go and check the Euro USD and Euro JPY one, because it's a lot better to trade with the trend on those ones, with the lower time frame trends. With those ones, it's a lot simpler and straightforward. But with this one, it might be complex. But I'm marking out structure. That's a low over there, higher low region over here, which I'm going to need to delete all these things when I'm done. Then we have a higher low region over here. Let me mark it out over here. This is a higher low region over here, low, higher low region, and then continuing upwards there's another one over here. The thing with US30 is your timing needs to be on point, man. You need to really time your entries. You shouldn't take just every trade, man. Wait for it patiently. There's a higher low region over there, and then there's another higher low region. I don't know what you should do in order to catch it properly, but maybe you should wait for the New York session, but it'll work on every session. Low, higher low, higher low, higher low, higher low, high, higher high, higher high, higher high. That's basically the structure of a bullish market over there, for those who might not know, right? Then there was some volatility over here. Price came back down, formed structure over here. As it was coming back down, it retraced over here. It continued to fall to the downside. It's now below the moving averages. It went up, then it came back swiftly down, retraced back to this moving averages. It rallied down, retraced back. Here's another one here. A counter trend starts here. After price, this is our region over here. It's marked, mixed both of them. It's marked from here to there. So we have lows and higher lows and higher lows. Then we have a higher high there. Price formed a double top there. It came back to the downside. It broke to the downside. Then it retraced. Then it reached this point over here. It rejected. So at that point up there, you could have entered even after that candle and put your stop loss at about 100 points, because going anything higher than 100 is quite risky. It's quite risky because the risk to reward ratio won't start playing in your favor. But with a good entry, with a good entry you can just go like 100 points, then you'll hold it. It goes 400 points, 1:4, a retracement, a lower high again, another sell opportunity, probably another 1:3, 1:4 trade over here. This is the structure: high, lower high, lower high. Let me mark it properly. Lower high region over here, sell opportunities there and there, lower high. Then what happened? Price reached this point, it came, it broke the trend. How do we break the trend? Once we go above a previous lower high, we have broken the trend. Now what we're looking for is a higher low. What happened? Retracement, continuation. Retracement, higher low, continuation. These are all trading opportunities, these ones. After the low, after the break, the next higher lows are buy opportunities. There was a buy, and a buy there. We are still in that market structure. And then there's this. Where's the last one? Somewhere here. That's the last one there. So went up, we came back, went up, came back, went up, came back. For about fourth or fifth time we continued up until we finally broke, came back, and we rejected. This is a signal candle for those who would have sold. Then it would have been a good job for them. Went about 150 points, then it came back up. There was a lot of volatility here. This is the thing about an asset like US30. There's a lot of volatility. It's actually happening now. Can you see when you're now doing trend trading in a market that looks like this? That's when you start getting slaughtered a lot. That's the reason why I don't like applying it on US30. I prefer applying it on Nasdaq. But as you guys saw, that's how you use it. You wait for a trend. Like for an example over here, this is the current structure we have right now. Over here, it's a high, lower high, lower high. Price is rallying to the downside. So looking at this beautiful structure here, if price breaks up and retraces and rejects, we are moving up. It's basically that simple. We're going into a new trend, right? For an example over here, there was a high, a lower high, a lower high. Price broke it, retraced, buy, went up. Same thing. If we break, retrace, buy, go up. If we come up, we reject, we're continuing with this structure. That's when the higher time frame comes in. You need to know what's happening on the daily time frame. The daily time frame will tell you, am I taking the trades in this market or am I sitting it out? Or you go to the 4-hour time frame. What's the 4-hour structure? Okay, I'm sitting it out, I'm not taking a trade. It's basically that simple. But I believe with Nasdaq it's a lot simpler, because as you can see, Nasdaq tends to have smooth movement. The movement on Nasdaq is very smooth. That's the difference between Nasdaq and US30. So you can easily trade with the trend with these movements. So it's a lot easier. I can see even when I went back to that side, you can easily see there are a lot of trend trading opportunities in this thing. Even though it has its times where it starts really slaughtering you, but even here there's no slaughter. Upwards, higher low, higher low, higher low. Price broke downwards, it broke the trend. Lower highs, we shot to the downside. So it all depends. But anyway, that's how you trade with the trend. I'm gonna go into more detail with Nasdaq. I'm gonna check it out as well, study it and see ways to apply this strategy with it. But most importantly, pay attention to the daily time frame. What is the daily time frame saying? What does the daily time frame want to do? That's what you need to know right now on Nasdaq right now. This is how the structure looks right now. This is the previous higher low. This is the previous higher low on Nasdaq. Over here, this is another higher low. These are points where people could have been buying. Higher low, and there's another higher low region over here. So right now is basically not a time for you to be trading Nasdaq. You should be waiting it out. But if you know what's happening on the daily time frame, for an example, we are quite high, I would wait for a retracement before I start buying. Wait for some form of retracement or some form of drop on the daily or 4-hour time frame. So if I know that, I'll go to the 30-minute and be like, you know what, if this thing happens to go below this and retrace, then I'm gonna sell it. It's basically that simple. It's trading with the trend, but I know what's happening on the higher time frame, so I know when to trade, I know when to sit it out. But anyway, that's it for this video. I don't want to make it too long. Stay tuned for more content, guys. I'm gonna study Nasdaq more, and I'm gonna keep uploading on Nasdaq videos. We'll trade it together.